Most homeowners assume their insurance covers everything inside their house. It doesn't. And for millions of people right now, that assumption is going to cost them. Right now, in the United States, we are in the middle of the largest transfer of wealth in human history. Baby boomers are passing down their estates, $84 trillion in assets changing hands through 2045. And buried inside those estates are concert posters, fine art, antiques, jewelry, collectibles, items that have been sitting in attics and spare bedrooms and living rooms for decades. Some of them worth far more than anyone realizes. And most of them are completely unprotected. Not because of fraud, not because of a bad insurance company, because of something called a sublimit, and almost nobody talks about it. So let me explain exactly what is happening, why it matters, and what you can actually do about it. Here is what a sublimit is. Your homeowner's insurance policy has a total personal property coverage limit. Let's say $100,000. That sounds like a lot. That sounds reassuring. But buried inside that policy are subcategories, and each subcategory has its own separate cap. That applies regardless of your total coverage limit. According to Progressive Insurance, if your engagement ring is stolen and your policy's jewelry sublimit is $2,500, that is exactly what you receive. It doesn't matter if the ring is worth $6,000. It doesn't matter if it's worth $60,000. The sublimit is the ceiling, full stop. For fine art, antiques, and collectibles, most standard homeowners policies cap coverage at $1,000 to $5,000 per category. Per category, not per item, the entire category. Think about what that means if you have inherited items. You inherit a collection of original Fillmore West concert posters from the 1960s. A single, authenticated first print poster from that era regularly sells at auction for $5,000, $10,000, sometimes significantly more. Your standard policy might cover your entire collection for less than the value of one piece. And there is something else almost no one knows. Standard homeowners policies cover personal property on what's called a named perils basis. That means your items are only protected against specific events listed in the policy: fire, windstorm, theft. But if you drop a sculpture, if you accidentally damage a painting while moving it, if your antique piece is broken during a renovation, not covered, not even close. Accidental damage to personal property is excluded under most standard policies. And that is the #1 way people actually lose irreplaceable items. Now let's talk about what actually fixes this, because there are real solutions. They just require one thing most people skip entirely. The first option is a scheduled personal property endorsement, sometimes called a rider. This is an addition to your existing homeowner's policy that lists specific items by name and ensures each one at its full documented value. Not a sublimit, not a category cap. The actual appraised value of the actual item. Most riders also cover accidental damage, which a standard policy won't touch, and the deductible is typically much lower. The second option is a standalone personal articles floater policy. This is a completely separate policy dedicated entirely to your valuables. It keeps any claims completely separate from your primary homeowner's insurance, which means filing a claim on a damaged antique won't affect your homeowner's premiums. And in most cases, these policies provide worldwide coverage. Your items are protected at home, on loan to a gallery, being transported, traveling with you, anywhere. Here's the piece almost everyone misses. To get either of these options, your insurance company will typically require documentation of the item's value. For anything of significance, that means a USPAP-compliant appraisal report from a qualified appraiser. Not a dealer telling you what they'd pay for it, not an eBay search showing you similar listings. A formal, written appraisal report, prepared by a credentialed appraiser, following recognized professional standards. That is what the insurance company will accept. That is what will hold up if you ever need to file a claim. And here's why that distinction matters so much. A dealer offer is what a dealer will pay you today to acquire the item. That number is almost always below market value because the dealer needs to turn a profit. An eBay search shows you what items are listed for, not what they actually sell for. A USPAP-compliant insurance appraisal establishes replacement value, what it would cost to replace that specific item in similar condition in the current market. Those three numbers can be dramatically different from each other, and only one of them protects you. Here's the mistake that happens over and over again. They inherit a collection. They assume their existing homeowner's policy covers it. They never think about it again, and then something happens. A fire, a break-in, a burst pipe. They file a claim, and they find out their collection was worth $50,000, and their policy is going to pay them $5,000. That is not the insurance company doing something wrong. The policy said exactly what it would do. Most people just never read that part. According to the Deloitte Art and Finance report, nearly $1 trillion in art and collectibles is expected to transfer between generations over the next 10 years. Those items need to be identified, documented, appraised, and properly insured before a loss occurs. Because once the loss happens, it is too late to get the appraisal. The coverage has to exist before the claim. There is one more situation worth understanding, especially if you are an executor or personal representative settling an estate in Virginia. Virginia law requires that a complete inventory of all estate assets, including personal property, be filed with the Commissioner of Accounts within 4 months of qualification. That inventory must reflect fair market value as of the date of death. For items of unusual value, a formal appraisal is the standard, and the appraisal cost itself is an allowable expense of the estate, which means the cost of getting it done properly can come directly out of the estate, not out of anyone's pocket. If you are in that position right now, managing an estate, trying to understand what the decedent's belongings are actually worth, that is exactly what a personal property appraiser is for. Whether you have inherited a collection, own items you have never had documented, or are settling an estate and need a USPAP-compliant inventory, the first step is always the same: a conversation, not a commitment. Just a conversation about what you have and whether it is protected. Stubblefield Appraisal Group provides ISA-credentialed, USPAP-compliant appraisals for insurance, estate, and private client purposes in the Roanoke Valley, Virginia area. The link to schedule a free consultation is in the description below. No pressure, just clarity on what you actually have and whether it is actually covered.